Credit cards. They're everywhere. Small, sleek, and deceptively powerful, they promise a world of convenience and instant gratification. Need a new phone? Swipe. Craving a vacation? Swipe. Unexpected car repair? You guessed it, swipe. It all seems so easy, almost magical. You get what you want, when you want it. But lurking beneath this shiny surface is a harsh reality. The truth is, credit cards can be a fast track to financial turmoil if used unwisely. The allure of buy now, pay later is tempting, especially in moments of urgency or temptation. But this ease of spending often masks a dangerous truth. Credit cards are not free money. They are loans that must be repaid, often with hefty interest and fees. Before you swipe, ask yourself, is this purchase worth the potential debt? Credit card companies love to entice you with rewards programs and introductory offers. These offers often include cashback rewards, travel points, and even sign-up bonuses that seem too good to pass up. But don't be fooled by these flashy perks. Hidden within the fine print of your card member agreement is a minefield of fees designed to trap the unwary. These fees are often buried in complex legal language that can be difficult to understand. Late payment fees, annual fees, balance transfer fees, cash advance fees. The list goes on. Each of these fees can chip away at your finances, often without you even realizing it. These charges might seem small individually, but they can quickly add up, increasing your debt burden significantly. For instance, a late payment fee might be just the beginning. It can lead to higher interest rates and additional penalties. For example, a single late payment fee of $39 can wipe out any rewards you might have earned that month. And if you miss another payment, the fees and penalties can snowball, making it even harder to catch up. Always read the fine print of your credit card agreement carefully. Understand the fee structure. Look for terms like APR, penalty APR, and grace period to get a full picture of what you're signing up for. If a fee seems unreasonable or unfair, don't hesitate to call your credit card company and negotiate. Many companies are willing to waive fees if you ask, especially if you have a good payment history. Remember, knowledge is your best defense against hidden costs. Stay informed, stay vigilant, and always keep an eye on your statements to avoid any unpleasant surprises. The most insidious aspect of credit cards is the interest rate. It's a silent killer of financial stability, often lurking unnoticed until it's too late. Often deceptively high, these rates can quickly turn a small balance into an insurmountable mountain of debt. What starts as a manageable expense can spiral out of control, leaving you feeling overwhelmed and helpless. Let's say you have a $5,000 balance on a credit card with a 20% APR. This might not seem like a huge amount at first glance, but the reality is far more daunting. If you only make the minimum payment, it could take you years, even decades, to pay off the debt, and you'll end up paying thousands of dollars in interest alone. The minimum payment is designed to keep you in debt longer, benefiting the credit card companies. High interest rates eat away at your monthly payments, making it feel like you're barely making a dent in your balance. Each month, a significant portion of your payment goes towards interest rather than reducing the principal amount. This can lead to a cycle of debt that feels impossible to escape. The stress and anxiety of mounting debt can affect your mental health, relationships, and overall quality of life. Always prioritize paying more than the minimum payment to minimize the impact of interest. Even a small increase in your monthly payment can significantly reduce the time it takes to pay off your debt and the total interest paid. Consider transferring your balance to a card with a lower interest rate to save money in the long run. Balance transfer offers can provide a temporary reprieve from high interest rates, giving you a chance to pay down your debt more aggressively. Credit card companies often advertise the minimum payment due as a convenient option. Don't be fooled. This seemingly small amount is a strategic move by the credit card companies to keep you paying for years. They make it sound like they're doing you a favor, but in reality, it's a financial trap. This seemingly harmless figure is a carefully calculated trap designed to keep you in debt for as long as possible. The minimum payment is often just enough to cover the interest and a tiny portion of the principal, ensuring that your balance barely decreases. Let's imagine Sarah owes $2,000 on a credit card with an 18% APR. She might think that making the minimum payment is a responsible way to manage her debt, but the reality is far different. Her minimum payment is $40. While this seems manageable, what Sarah doesn't realize is that a large chunk of that payment goes towards interest. In fact, only a small fraction of her payment actually reduces her principal balance. While this seems manageable, what Sarah doesn't realize is that a large chunk of that payment goes towards interest. Over time, this means that her debt will barely decrease, and she will continue to pay interest on the remaining balance. At this rate, it will take Sarah over 11 years to pay off her debt, and she'll end up paying over $1,600 in interest alone. This is money that could have been used for savings, investments, or other essential expenses. The minimum payment is designed to cover only a small portion of your principal balance, while the rest goes towards interest and fees. This ensures that you remain in debt for a longer period, paying more in interest over time. This creates a vicious cycle where your debt grows even as you make regular payments. The longer you stay in this cycle, the more difficult it becomes to break free. Always strive to pay as much as you can, as often as you can, to escape the minimum payment trap. By paying more than the minimum, you can reduce your principal balance faster, save on interest, and achieve financial freedom sooner.